Welcome back to the FlipNerd.com REI Classroom, where experts from across the real estate investing industry teach you quick lessons to take your business to the next level. And now, let's meet today's expert host.
Good morning, everyone. Steve Bighaus with Security National Mortgage, host of the REI Classroom. Today, I think is an important topic. We're going to discuss maximizing your buying power.
This REI Classroom real estate lesson is sponsored by UglyOpportunities.com.
Now, this is going to, it's really a good question to ask because I get a lot of people that are, they're single, they're married, maybe they're domestic partners. There's a way that they can get past the 10, and there is. Okay, so there's a couple of different ways. We're going to discuss that. First, let's talk about if you're married or if you're in a domestic relationship. So what you can do in that is what we try and do in that is we want to see if we can qualify the borrowers individually. So in the guidelines, it states that you can have up to 10 finance properties per borrower. It's not per married couple or partnership. So let's just put that aside. So what we do is when we're looking at that as far as the qualification, we're looking at can they qualify and cover their existing housing expense, which is rent or first mortgage payment, or any installment revolving debt that they have. Now, you can utilize rental income to offset the payment, so that's great. So it basically washes that out. Now, if the answer is yes, they can do that, then, we can qualify them individually. But it's very important, and I tell my clients that when you do that, when we qualify, you have to make sure that there's a clear division between both. And when I say that, I'm talking about the properties. So in other words, that if the, one spouse buys a property, what they're going to do in that, the property needs to be in their name's on the loan, okay? And then, so really important, if they form an LLC and they move the property into an LLC, it has to be 100% owned by that individual. So a single member LLC. The other things people will get up in that, they'll put properties into a trust, which is fine. But the problem is, a lot of times on the trust document, both partners or spouses in that are on the trust document. Again, ties you back to that property. So clearly defined is really important. I mean, it's an absolute must to be able to do that. Now, when there are some things that we wanted to take into consideration when we're doing that. And first, sometimes lenders will come out and state that you have to file separate tax returns. You've got to have separate bank accounts. That is not correct. Okay, you can file joint tax returns. All we have to do in that is we have to, when we're doing the analysis, if you own other rental properties, determine who owns what income we can give you. That is it. Perfectly acceptable. As far as assets, joint bank statements. So you've got a joint account, husband and wife, and that, or a domestic partner. What you're able to do in that is the person that is not actually buying writes an access letter that other person has 100% access to those funds. So it's easy to do. It's just a little bit of work on our end. You write the right, you have to ask the right questions to be able to do it. Very important that when we do this, that all through the process while we're doing this and that they stay in contact with somebody like myself to make sure that they don't step out of that. Because occasionally they'll hear somebody a great idea that it's gonna work for them, and that when in all actuality it doesn't. It shoots them in the foot. So again, and then some of the other things you can do. So let's say you're single, you're not married. Okay, so you get up to that. Number 10 finance properties. How can you proceed on? There's a couple of different ways you can do it. First thing you can do is you can move on to a portfolio lender. That's something you definitely can do. And there are some portfolio lenders that are out there and do that. Understand that they're not, you're probably not going to get the same rates, the same terms, and the cost will be a little bit more expensive, but it is an option. The other way is you could actually form a corporation, either an S Corp or a C Corp. Now, I highly doubt that you can form a C Corp, because of the double taxation and the number of stockholders. So the logical solution would be to form an S Corp. If you were to do that, you could take and you could bundle all of your investment properties, move them into the S Corp along with the financing. So now all of a sudden you've got all of your properties are in your S Corp. They're titled in the S Corp. Now what you can do is you can come back to me and you can start over again with your Fannie and Freddie, simply because of the fact anything that's in that S Corp is not counted as finance properties. Let me, on an ending note, let me clear up a misconception. I get so many people that call me up and tell me that they've looked online, they've talked to another loan officer, says if you move into an LLC, they don't count. That is an incorrect statement. I repeat, that is an incorrect statement. LLC, a limited liability company. It has some of the aspects of like a sole proprietorship, partnership, and a corporation, but it is not a corporation. The only thing that Fannie Mae recognizes is an S Corp or a C Corp, where that's going to happen. So hopefully that this has been informative. If you've got any additional questions, you can always feel free to give me a call. Again, Steve Bighaus, Security National Mortgage, and take care, and everybody have a good day. Thank you.
Homevestors, the We Buy Ugly Houses folks, is a franchise system of hundreds of real estate investors that have purchased over 65,000 houses. If you'd like to learn more about the most powerful real estate investing system in existence, whether you're a pro looking to take your business to the next level, or whether you have no experience at all but a burning passion to be successful in real estate investing, please visit flipnerd.com/ugly to learn more. Please note the views and opinions expressed by the individuals in this program. do not necessarily reflect those of flipnerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing. Are you a member yet of flipnerd.com, the hottest real estate investing social community online? If not, you can join for free in less than 30 seconds and get access to hundreds of off-market deals, vendors in your market to help you in your business. And you can start networking with thousands of other investors just like you. Get your free account now at flipnerd.com. Please check out the Flipnerd family of real estate investing shows, where you can access hundreds of expert interviews, quick tips, and lessons from leaders across the real estate investing industry. They're available at flipnerd.com/shows, or simply search for Flipnerd in the iTunes Store.